Hey guys, welcome to another episode of Parker Group Live. We wanted to talk to you today a little bit about some questions that we've received recently related to federal legislation and how that might impact housing. And so there's some new bills that are kind of floating around DC, and so we wanted to explain what that impact might be for you as an individual in the housing market and for housing in general. So Rachel's going to talk to us a little bit about that.
Yeah, so like Dustin said, we don't like to get mixed up into politics whenever we can avoid it, but when it starts to affect real estate and there's valuable information that we can share, we thought it might be a good opportunity. So as you may or may not know, the House and Senate have both passed their proposals for the tax overhaul bill at this point, and there are a few minor differences between the two. However, there are some big areas, generally three, that do impact homeowners. And so the first area that impacts homeowners is the mortgage interest deduction. Currently, homeowners can, for mortgages up to $1 million, you can deduct the mortgage interest that you're paying. And there's also an additional $100,000 of equity debt, like a home equity line of credit, that you can also deduct the interest on. In the House proposed version of the bill that we're looking at now, they would cap that mortgage interest deduction at $500,000, so kind of cut it in half. And it's only for your primary residence. So that does affect Delaware because currently you can do your primary residence plus one secondary residence. And as people that live in the beach areas know, there are quite a few second homes in the Delaware beaches. The Senate version of the bill keeps that cap at $1 million, but it does remove the $100,000 of equity debt that people can use with home equity lines and things of that nature. And just to give you a general idea, in Delaware, about 10% of our housing units are vacation homes. So that's pretty significant in Delaware. The next facet that doesn't affect us as much, thankfully, in Delaware because we have such low property taxes is the property tax deduction. So currently you can deduct quite a bit of property taxes from your bill. The new tax bill is going to, in the House version, cap your property tax deduction at $10,000 of property taxes, which, like I said, here in Delaware, luckily, not many people fall into that category. I think it was 0.2% that actually have a property tax bill that high. However, the Senate bill completely eliminates the property tax deduction, so that's something to keep in mind. And then finally, the capital gains exemption is going to be changed. So currently, if you own a home and you are living in it for at least 2 of the last 5 years, you can deduct the income or the profit that you make off the sale of that home up to $250,000 as a single person or up to $500,000 as a married couple. So that's quite a bit of profit, and if you're selling houses and making that much money, we want to talk to you. But the changes are going to affect that too. In both versions, you have to live in the house for 5 of the last 8 years rather than 2 of the last 5. So in practice, what that really means is you can use that deduction once every 5 years rather than once every 2 years. So those are some of the areas that might affect real estate in our area. And the National Association of Realtors is also projecting that this bill will cause housing prices to drop by roughly 10% nationwide. However, in Delaware, they're saying specifically 9 to 13% drop in housing prices based off of these changes in the bill.
Yeah, and I think in some of the markets, especially where property taxes are much higher, for example, places like New Jersey, New York, Connecticut, I think we're going to see more people probably moving to places like Delaware that have lower property taxes where they're not as much impacted by some of these changes in the tax law. So
sure. So hopefully this is useful information. You know, we are not tax policy experts, but we like to share what we find through our channels and how that might impact you.
Yeah, so always talk to your accountant before making tax decisions, but if you need real estate advice or if we can guide you in any way, give us a call, comment below, let us know what your thoughts are on the new tax law and regulations coming. Thanks.
Thanks, have a great day.